Africa's Industrial Development Corporation has announced that it's approved funding amounting to 8.4 billion rands in investments for the financial year ended March. The corporation's CEO, Geoffrey Qhena, spoke to us earlier on Regional Roundup about their financial results.
This is from the investments that we've made. We've received some dividends, also from the interest rate repayments that we've had from some of our investments, but also the share of our associates, our share in the associates companies. That, and also we've contained our costs. That has allowed us to be able to report these figures.
All right, at an operational level, you seem to be doing well, but you also seem to be spending a lot of cash, 8.4 billion in South African investments that have been approved, targeting a lot of job creation strategies. Just tell us how you've dispersed the money, why?
The money has been dispersed to a number of sectors. This time around, the biggest beneficiary has been on the manufacturing sector, because we know that's where the jobs have been lost. And so we're really trying to respond to that. But also we've seen in the mining side, also particularly on the beneficiation, that's where we would want to go. Also on the new addition in our portfolio, the green economy, that's one area we have been. Also on the infrastructure in terms of hospitals and some of the other industrial infrastructure. So those are the areas, because we hope those are the areas we'll be able to create jobs.
In terms of these investments, just talk us through very quickly the spread and equity regionally.
Regionally, the 8.4 is for South Africa. For the rest of the African continent, this time around, we've had only about 300, but that's net of approvals, because we had a big cancellation in Eritrea, a mining there, which it was really because of forces out of our control. Yeah.
Okay. Now, you talk about a lot of the projects that you undertake in the manufacturing side and the green economy, and I think it speaks to the vision that you see for yourself, the role that you see for yourself in implementing and advancing government's priorities as articulated in the New Growth Path and the Industrial Policy Action Plan number 2. Why is it your responsibility to implement those?
The role of the development finance institutions is to support government, particularly on the financing side and in developing industries, to ensure that then jobs are being created. So that's why we exist. I mean, for over 70 years, that has been the primary role of the IDC.
Okay, nicely put. Now, you've reported a profit in times of slowed growth in South Africa, and some would be wondering whether or not some of these figures would be sustainable going forward, because growth is expected to be sluggish.
Well, the profit that we've reported really talks to our ability of ensuring that we invest in sustainable business. In fact, we also need that profit so that we can invest it in other projects, particularly for the startups, those new ones. And going forward, I think if we look at some of those investments that we have, we think it is sustainable. But one can never predict that it will be at the same levels as we are. Right. It's because more and more we're getting into new areas and new startups. So then it will put pressure on the level of profit that we would have in the future.
I mean, going back to your priorities in terms of supporting a lot of these government initiatives, some would argue, for instance, you're putting a lot of money in manufacturing. This has proven not to be South Africa's competitive advantage. So in many ways, you're going to be throwing money at a problem that you can't ultimately solve, because we've seen export figures decline in general, just not competitive enough. When you look at SMEs, for instance, where you're also very active, the life cycle of an SME is quite vulnerable to shocks within the system. And a lot of SMEs have bucked under the pressure of an economy not doing well. So going forward, the sustainability of your projects, how are you going to buffer against the risks that are incumbent? How are you going to ensure that there's sustainability ultimately?
When we look at investments, we spend a lot of time on the due diligence. Marketing is being one part of that. We know where companies have struggled is because they've gone to traditional markets. If you look at the trade within the African countries, that's an area which has not been tapped. I think there's a lot of potential, and we'd like to believe that that's an area which we can target as South Africans. All
right. New Growth Path, emphasis on labor-intensive jobs in the sectors that you've outlined. Where do you fit in beyond the financing? Because we also know that a lot of the inputs need to be technological, they're quite expensive, we've got a volatile rand, or have had in the past. You need to also work within that very complex environment.
For startups, for people who are starting businesses for the first time, we do have supports, over and above it. But for the established businesses, what we hope we can achieve is to help them modernize, help them bring in new capacity, and we think that will help. And also to try and guide them into the new markets that we have. I think that will help. Also, when they experience difficulties, we had set aside 6 billion, of which about 4 billion now has been, over 4 billion has been actually taken up. So there's about 2 billion for companies that find themselves in difficulties as a result of the recession, that they can still access that.